Hello everyone. In this video, I will cover involuntary deductions from Section 9. I will talk about the creditor garnishments, bankruptcy orders, and student loans. There is a separate video on federal tax levies and child support orders. I will leave a link in the description box for those videos so that you can view them. So let's begin this video. Creditor garnishments. When the employee has a debt that remains unpaid, a wage garnishment, which is also called wage attachment or income execution order, is executed against the employee so that the person or non-governmental third party who is owed the money can receive the payment. What is the limit on amount that can be garnished for the creditor garnishments? So, as per the Consumer Credit Protection Act, the minimum amount of the employee's disposable earnings that can be garnished is lesser of 25% of employee's disposable earnings for the week, or the amount by which the employee's disposable earnings exceed 30 times the federal minimum wage. We all know that the federal minimum wage is 7.25. We multiply that by 30 and we get the amount $217.50, meaning that $217.50 is exempt from the garnishment. So after calculating 25% of employees' disposable earnings, we will compare that amount with the amount that is over $217.50, and we will pick the lesser amount. That is the amount that will be subject to garnishment. We will look at one example. Before looking at the example, let's refresh our memory on disposable earnings. The term disposable earnings mean amount of pay remaining after legally required deductions like your taxes, Social Security, and Medicare. So the bottom line is, under the garnishment order, disposable earnings are wages remaining after mandatory wage deductions, but before elective deductions like your 401k, union dues, etc. Now let's look at the example. Beth's employer receives creditor garnishment. Her weekly disposable earnings are $550. What is the maximum amount that can be garnished from her wages? So if you remember the formula, we will first calculate 25% of 550 and it gives us $137.50. Now we will compare that with the amount that is more than $270.50, which is the exempt amount by law. So we will reduce our disposable earnings by $217.50, and the amount that we get is $332.50. Now this is the amount that is subject to garnishment, but we will compare this amount with the other amount that we calculated, 25% of 550, and we will pick the lesser amount. So the lesser amount in this case is $137.50, and that is what we will deduct for this creditor garnishment. Let's look at one more example. In this example, Sandra's disposable earnings for the week are $250 when her employer receives a garnishment order requiring that $300 must be withheld. The maximum amount of Sandra's disposable earnings that can be garnished is determined as follows. Lesser of 25% of 250, which gives us $62.50, or $250 minus 217.50, which is the exempt amount by law, and the amount that we get is $32.50. So we will compare which amount is smaller out of 32.50 and 62.50. Obviously it is 32.50. So 32.50 may be deducted to satisfy the garnishment. Now let's see how to handle the multiple garnishments. So for the garnishments, the maximum amount that can be withheld is 25%. The federal garnishment maximum limit applies no matter how many garnishments are received. Example, if the maximum is already being withheld when the second garnishment is received, nothing should be withheld from the second garnishment until the first one is over. Example, employee Lawrence's disposable earnings for bi-weekly pay period are $1,000 when his employer receives a child support withholding order demanding that $400 be withheld from her each paycheck to satisfy the order. After withholding $400, which is 40% of 1,000, Lawrence's disposable earning remain 1,000 under CCPA. Why? Because for disposable earnings, we only deduct mandatory deductions required by law, and child support order is not a mandatory deduction. So 40% of disposable earnings were going towards child support order when the employer received a garnishment order for $500. In that case, nothing will be withheld from the garnishment because 40% of Lawrence's disposable earnings are already being withheld for the child support order. Now let's assume the same facts as we discussed above, except that the child support order is for $200 per bi-weekly pay period. With the disposable earnings of $1,000 per pay period, that means 20% of Lawrence's disposable earnings are being withheld for the child support order. That leaves 5% available to satisfy the garnishment order if the employer receives the garnishment order later. So the employer will deduct $50 and transmit that money to the garnishment order. Next topic is bankruptcy orders. Bankruptcy orders are handled by Federal Bankruptcy Code. Once the employee voluntarily declares bankruptcy or is found bankrupt by the court, the satisfaction of employee's creditor is handled by the bankruptcy trustee appointed by the court. The employer should keep withholding all existing orders until notified by the court or the trustee to do otherwise. Now, once the employer receives the bankruptcy order from trustee, requiring a certain amount of the employee's wages to be paid to trustee, the employer should stop withholding on any orders except the child support order. What is the priority of bankruptcy orders? Bankruptcy orders issued under Chapter 8 of Bankruptcy Act takes priority over any other claims against employees' wages, including federal and state tax levies received before bankruptcy order, other than the child support order. The reasoning behind ceasing other withholding for garnishments once the bankruptcy order is received is that the debts underlying those garnishments will be paid by the trustee out of the money withheld under the bankruptcy order. So if the employee has multiple orders like federal tax levies, creditor garnishments, child support orders, the employer will only be responsible for still withholding for the child support order, and the rest will be taken care of by the trustee appointed by the bankruptcy court. Next topic is student loans. So while working hard to get our education, some of us are left with a big amount of student loans that we need to pay back to the government. Once we start working and earning money, Higher Education Act allows garnishment of the employee's wages to pay back on the delinquent student loans. And the maximum amount that is subject to loan garnishment is lesser of 15% of the disposable earnings, or the amount by which the employee's disposable earnings exceed 30 times federal minimum wage, again that $217.50 amount. Even though the Higher Education Act limits garnishments to 15% of employees' wages, this limit applies to each individual holder of student loan. Where an employee faces multiple student loan garnishments, the maximum amount that can be garnished in total is CCPA limit of 25% of the disposable earnings or excess of the employee's weekly disposable earnings above 30 times the federal minimum hourly wage, whichever is less. How should the employer handle the student loan? Should the employer start withholding right away? Employee must receive at least 30-day notice before withholding begins. What is the priority of student loans? So the child support order and federal tax levies have priority over student loans. What is the rule for withholding for student loans for the employees who were terminated and rehired? The employees who lose their jobs and become re-employed within 12 months after termination are given 12 months from the date of re-employment before the student loan garnishment is put into effect. Now we're going to discuss the federal agency debt collections. These garnishments can be applied only to non-tax federal agency debts, since tax debts are collected through the tax levies issued by the IRS. What is the limit on maximum amount to garnish for the federal agency debt collection? The maximum amount is again the lesser of 15% of employees' disposable earnings or the amount by which the employee's disposable earning exceed $270.50. Now this slide shows some deductions that can result in wages below minimum. Wage attachments and garnishments, yes, they can bring your wages below the federal minimum. Voluntary deductions, because the voluntary deductions are deducted at employee's will, they can also bring the wages below minimum. Board, lodging, and other federal facilities. For this, it depends. If it is for the employee's benefit, then the wages may come below minimum. And if it is for the employer's benefit, then it should not be below minimum. The employer should not deduct anything that is bringing the employee's wages below minimum. Loans to employee. The principal may be deducted. Interest is not deducted if it brings employee's wages below minimum. Salary allowances and overpayments. Yes, they can bring the employee's wages below minimum. Then a deduction for taxes, it can also reduce the employee's wages below minimum. Union dues, it can be deducted if required by the union contract. And that's all in this video. But before leaving, please check out some links I have put in description box on useful resources on garnishments. One is from APA and the other one is from Department of Labor. And I'll work on my next video that I will upload next week. Until then, happy learning. Goodbye.